Welcome back to the channel. In today's video, we're diving into the latest update from the Bank of England following their meeting earlier today. They've made a key decision on interest rates, but more importantly, their outlook for the future is where things start to get a bit concerning. I'm going to walk you through exactly how the vote went, who wanted rates to stay the same, who pushed for an increase, and what their projections are for the months ahead. Some of those projections, honestly, are quite alarming, especially when you look at the potential impact of the ongoing situation in the Middle East. There are even scenarios where multiple rate hikes could happen if things don't improve. Before we get into all of that, if you're new here, make sure you subscribe and turn on notifications. We've now crossed 54,000 subscribers, and on this channel, you'll get regular updates on house prices, interest rates, and general investing insights. Also, don't forget to hit the like button. It really helps the video reach more people and supports the channel's growth. Now, as you can probably tell, I'm not in the usual office setup today. I've been hosting a business mastermind event at a hotel. Right behind me is Euston Station, and yes, that's the HS2 project that never seems to make any real progress. Every time I come here, it feels like they're just shifting dirt from one place to another. Maybe one day it'll actually be completed. We'll see. Let's get into the main update. The Bank of England has decided to keep interest rates unchanged at 3.75%. This was widely expected, mainly because there's so much uncertainty right now. The situation in the Middle East is unpredictable. Things could calm down quickly or escalate again just as fast. That uncertainty is playing a huge role in decision-making. Because of this, they've chosen to wait and observe rather than act immediately. There are 9 members on the committee, and 8 of them voted to hold rates steady. However, one member, Hugh Pill, actually voted for an increase this time. That's something to pay attention to. A big part of this decision comes down to inflation. Right now, inflation is sitting around 3.3% to 3.5%, and it's expected to edge slightly higher over the summer. Ideally, the target is 2%, and they made it clear that without the current global tensions, we likely would already be there. They presented several possible scenarios moving forward: a best case, a middle ground, and a worst case. In the worst case scenario, inflation could rise as high as 6.2% by the end of the year. That's obviously not good, but it gets more serious when you look at what this prediction is based on. It assumes oil prices reach around $130 per barrel. Now here's the worrying part. Oil has already climbed to about $126 recently, so we're not far off that level at all. If it goes slightly higher and stays there for a while, we could be heading into that worst-case situation. If that happens, the Bank of England is suggesting there could be up to 5 interest rate increases. That would take rates to around 5.25%, which would put significant pressure on borrowers and the wider economy. At the same time, rising oil prices would push up energy costs, which then feeds into higher living expenses, especially affecting lower-income households. Food inflation is also expected to hit around 10% by the end of the year, adding even more strain. The bank also acknowledged that this is not something they can easily control. It's a global issue, not just a UK-specific problem. That's one of the main reasons they're being cautious about making aggressive moves right now. They were questioned on why they're not acting sooner, especially considering past criticism during the COVID period for reacting too late. Their response was simple: this situation could change very quickly, and making the wrong move too early could cause more harm than good. Interestingly, they also mentioned that even if inflation rises, they won't rush to bring it back down aggressively. The reason is that acting too fast, especially with sharp rate hikes, could damage economic growth, increase unemployment, and potentially trigger a recession. Speaking of unemployment, they estimate it could rise from around 4% to as high as 5.7% in a worst-case scenario. That would have serious consequences for millions of people. Now let's talk about mortgages. In the short term, mortgage rates could still come down slightly. That's because they're influenced by SONIA swap rates, which are essentially predictions of where interest rates are heading. Over the next few days, markets will react to this announcement, and that will determine the direction. If markets believe rates will rise in the future, swap rates will increase, which makes borrowing more expensive for lenders, and that eventually gets passed on to customers. If you're in the process of remortgaging, the current strategy would be to secure a deal now. Lock in a rate to protect yourself in case things go up. If rates drop before your new deal starts, you can still switch to a better option. Some lenders are even considering rate cuts in the near term. For example, there are deals being discussed that could fall below 4%, which is something to watch closely. So to sum everything up, holding rates steady for now is a positive outcome. Two of the projected scenarios suggest stability, but the worst-case outlook is quite serious. If oil prices stay high, inflation could spike, and multiple rate increases may follow. At the moment, oil prices are already close to that critical level, so the next few months will be crucial. Best case, the geopolitical situation settles down and things begin to normalize. But what do you think? Do you believe interest rates will go up this year, or will the bank hold off and wait it out? Drop your thoughts in the comments. I'd really like to hear your perspective. And one more thing. Do you think HS2 will ever actually be completed, or are we just going to keep watching the same construction forever? That's all for today. Make sure to check out the other videos on the channel, including the one coming up next.